Welcome back to the deep dive. We're the show that takes those sometimes really confusing documents and tries to make them make sense, actionable sense even.
Yeah, turning jargon into, well, something useful.
Exactly. And today we're tackling tax season stuff, which, let's be honest, could feel like a chore. Spreadsheets, forms, maybe a little bit of, ugh, do I have to?
Definitely get that feeling.
But what if that form, the W-2, what if it wasn't just paperwork, but more like a secret decoder ring for your whole financial year?
It really is. People see it as just this thing their employer sends, right?
Yeah.
Something to file away, maybe give to their tax person.
Mm-hmm.
But today, that's our mission. We're peeling back the layers. Not just the W-2, but his partner, the W-3, which most people never even see.
Okay.
We're going to go box by box, find those surprising facts, those little details, the things that make you go, uh-huh. About your income, yeah, but also maybe hidden benefits.
And maybe, just maybe, ways you're already saving on taxes.
Yeah.
Without even realizing it.
Yes,
Yeah.
exactly. Those built-in tax savings moments, they're often right there on the form.
I love that. A secret decoder ring. So we're going deep, connecting the dots between employer reporting and, your actual money situation.
Right.
Like a shortcut to being properly informed.
Totally. Getting beyond just the surface level numbers.
All right, let's do it. Part 1, the foundation. Let's just start with the basics. What are forms W-2 and W-3?
Okay.
Let's kick off with the W-2, the wage and tax statement. Sounds official. What's its main job? And who actually sends it?
Right, the W-2. Its core job is for employers to report to the IRS, the Social Security Administration, and crucially to you, the employee.
Mm-hmm.
It tells everyone how much you earned, wages, tips, other compensation over the calendar year, and just as important, how much tax was withheld. Federal income tax, Social Security, Medicare.
Okay, so it's the official record, and it's one per employee.
Yep, one W-2 for each employee. So if you worked 3 jobs last year, you should get 3 W-2s, no consolidation.
Okay, that makes sense. So it's not just about, earning over a certain amount, is it? Feels like the rules for when an employer has to send one are pretty specific.
Oh, they are. Very broad, actually. Designed to catch almost everything. An employer must send you a W-2 if, well, any of these things happened.
Okay, like what?
1, if they withheld any tax. Income tax, Social Security, Medicare, even a tiny amount.
Any amount at all. Wow.
Any amount. 2, if they should have withheld income tax. Even if you, say, claimed a bunch of allowances on an old W-4 or claimed exemption, if tax would normally have been due, they need to file a W-2.
Ah, so it covers situations where maybe the withholding was 0 but shouldn't have been.
Exactly. And 3, even if 0 tax was withheld, if they paid you $600 or more in wages during the year.
$600, okay.
Yeah. So between those 3, it covers pretty much all standard employment. Very few exceptions.
So it really is comprehensive. Good heads up for part-timers or seasonal folks, too.
Yeah.
Are there any loopholes, like times when a W-2 isn't needed? Must be super rare.
Super rare, yeah. We're talking really specific cases, like maybe certain election workers paid less than $600 with no FICA taxes involved.
Okay.
Or maybe some very specific foreign agricultural workers under an H-2A visa also earning less than $600. But honestly, for almost everyone listening, if you got paid by an employer, expect a W-2.
Right. Assume you're getting one.
Yeah.
Okay, now, the W-3. You mentioned this earlier. We don't see this one, but it's key for the employer.
Totally key for the employer. Form W-3, the transmittal of wage and tax statements.
Hmm?
Think of it like the cover sheet for all the W-2s an employer sends to the Social Security Administration.
So it bundles them all up.
Exactly. It summarizes the totals from all the individual W-2s, total wages, total taxes withheld, everything. It gives the SSA the big picture for that one employer.
Got it. The grand total summary. Okay, deadlines. Super important. For employers, yes, but also for us waiting for our W-2. What are the key dates for, say, the 2025 tax forms?
Okay, for the 2025 forms, the ones you'll use for taxes filed in early 2026. The deadline for employers to file both the W-2s and the W-3 with the Social Security Administration is February 2, 2026.
February 2nd.
Yep. And that applies whether they file on paper or electronically. And here's the key date for you. February 2, 2026 is also the deadline for employers to get your copies B, C, and 2 into your hands.
Okay, so if it's past Feb 2nd and you don't have it, maybe time for a polite nudge.
A polite nudge might be in order, yeah.
What about extensions? Can employers just get more time easily? We hear about tax extensions all the time.
Good question, but a common mix-up. Extensions for filing W-2s with the SSA, not automatic, not at all.
Really?
Yeah, an employer can request one 30-day extension using Form 8809, but, and this is a big but, it's only granted in extraordinary circumstances or catastrophe.
Like fire, a flood.
Pretty much. Natural disasters, things genuinely outside their control. It's not for, oops, we got busy. And critically, even if they do get an extension to file with the SSA, that doesn't extend the deadline to get your copy to you. That February 2nd date for employees is firm.
Wow. Okay, so employers really need to have their ducks in a row. No wiggle room there.
For sure.
Let's talk e-filing. It's everywhere now. Is it required? What's the deal?
It's required for many, yes. The rule is, if an employer has to file 10 or more information returns total in a year, they must e-file their W-2s.
10 total, not just W-2s.
Right. That's the key. It's a cumulative count.
Yeah.
It includes W-2s plus 1099s for contractors, 1098s for mortgage interest, all those kinds of forms. If the grand total hits 10 or more, everything pretty much has to be e-filed.
So that probably covers most businesses of any real size then.
Definitely. It pushes most employers towards digital filing.
And what are the upsides? Why the big push from the SSA?
Well, the SSA loves it, encourages it heavily. For employers, it saves time, paper, hassle, big pluses there. But for the system, accuracy. E-filing cuts down way down on errors. Fewer typos, fewer processing delays. It just makes the data cleaner. And they provide tools like the Business Services Online website, the BSO.
BSO. Okay, how does that work for employers? Are there different options?
Yeah, two main ways. For smaller batches, say 50 or fewer W-2s or 25 or fewer corrections.
Corrections, right, W-2C.
Yep, W-2C. For those smaller numbers, they can use the online creation tool on BSO. Walks them through it step by step right on the website. Super user-friendly, generates the W-3 automatically.
Nice. And for bigger companies?
For larger volumes, more than 50 W-2s or 25 W-2Cs, there's a file upload option. This needs special payroll software that creates files in a very specific format, which the SSA specs out. Then they just upload that bulk file.
Gotcha. And just to be crystal clear, if they e-file, they absolutely do not send paper copies too, right?
Absolutely not. One or the other. Sending both creates duplicates, confusion. It's a mess. Pick a lane, stay in it.
Okay. And you mentioned a security update for BSO.
Yeah, relatively recent, since March 2023. Extra security layers. The advice is for employers, new or current users, to allow a good 2 weeks to get through the registration or update process. Don't leave it till the last minute. It's about protecting data, which is good, but requires planning.
Good heads up for employers. Plan ahead. Okay, so
Yeah.
what if mistakes happen? An error gets spotted after filing. That's where those correction forms, W-2C and W-3C, come in.
Exactly. Form W-2C, corrected wage and tax statement, and its cover sheet, W-3C, they're purely for fixing mistakes on forms already filed.
What kind of mistakes?
Could be anything. A typo in a name, wrong SSN, wrong dollar amount for wages or taxes, anything that was incorrect on the original.
And the timing.
The official guidance is as soon as possible after finding the error. Timeliness matters because mistakes on your W-2 can mess up your tax return, your Social Security record, everything. Quick correction is key. And, just a note, updated versions of those forms came out in June 2024. Minor tweaks, mostly.
Good to know. Okay, that sets the stage perfectly. Now, let's get into the part everyone's really waiting for, decoding your W-2. Box by box. This is where you find your financial story for the year.
Yeah, the good stuff.
Let's start with the basics, the ID info. Boxes A, B, C, E, F, I. Accuracy here is non-negotiable, right?
Absolutely critical. This info links the earnings to you and your employer for both the IRS and the SSA. Get this wrong, and it causes downstream problems for years.
Okay, box A, employee's Social Security number, SSN.
The big one for you. Needs to be the exact number from your Social Security card. This is how the SSA tracks your earnings for future benefits. Now, an interesting point. On the copy you get, employers can truncate it, mask the first 5 digits, like Monotask 1234. It's allowed, voluntary, for privacy on your copy.
Oh, okay, so I might see asterisks.
You might, but, and this is important on copy A, the official one filed with the SSA, no truncation allowed, full SSN only.
Got it. Privacy on my copy, full data for the government. Makes sense. What about the employer's ID? Box B.
Box B, the Employer Identification Number, or EIN. That's the employer's tax ID. Think of it like their business SSN identifies them. And unlike your SSN on your copy, the EIN cannot be truncated on any copy, ever.
Okay, EIN always full. Then boxes C, E, F, and I are names and addresses.
Right. Employer's name, address, ZIP, and C. your name, address, ZIP, and ENF. Box I is also for your address info. Key here for your name. It should match your social security card exactly. Consistency is king for the government databases.
Good tip. If my name's spelled wrong, I should tell my employer.
Definitely worth flagging. Same with address errors, though we'll talk later about how fixing just an address is simpler.
Okay, now, the main event for many people. Box 1, wages, tips, other compensation. This is the number that feeds into your tax return, right? The taxable income baseline.
That's the one. Box 1 is your total taxable wages for federal income tax. It's usually the biggest number on the form, and it includes a lot of different things.
Like what? Beyond just regular salary.
Oh yeah, your regular pay, sure. But also bonuses, signing bonuses, performance bonuses, any prizes or awards you won from work. Non-cash stuff too, if it's taxable.
Non-cash, like perks.
Exactly. The classic example is personal use of a company car. If you drive the company car for non-business trips, the value of that personal use, taxable, goes into box 1.
Oh, okay. What else? Tips.
Yep, total tips you reported to your employer land in box 1. Also, certain reimbursements for business expenses, specifically if they're from what's called a non-accountable plan.
Non-accountable, meaning?
Meaning you didn't have to, submit detailed receipts or return any unused money. Less formal reimbursements often end up being taxable income in box 1.
Gotcha. So it's not just salary, it's bonuses, taxable perks, tips, some reimbursements. It adds up.
It really does. Other things you might see folded into box 1. Cost of health insurance premiums for certain S-Corp owners. If you took cash instead of a benefit from a Section 125 cafeteria plan.
Cafeteria plan, like where you pick benefits.
Right. If cash was an option and you took it, that cash is taxable in box 1. Also, some employer contributions to Archer MSAs, taxable group term life insurance over $50,000, payments for non-job-related education unless it's under a specific tax-free program.
Section 127.
That's the one. Also, if your employer paid your share of Social Security and Medicare taxes, unusual, but it happens, that amount paid for you is taxable income in box 1.
Wow. And Roth contributions, like a Roth 401k.
Yes, designated Roth contributions to 401ks, 403bs, governmental 457bs, those are included in box 1 because they're made after tax.
Okay, after tax, we'll circle back to why that matters.
Well,
What else?
distributions from non-qualified deferred comp plans, payments to statutory employees, kind of a special category, even the fair market value of virtual currency paid as wages.
Bitcoin wages in box 1.
Yep. IRS treats crypto as property, so its value unpaid is taxable income. Box 1. Also, non-qualified moving expenses, certain scholarships, it's a broad definition of taxable compensation.
It truly is. Okay, but here's the flip side, and maybe the first big tax savings moment for listeners. What is not in box 1? What gets excluded, and why is that so important?
This is huge. This is where you often see the immediate benefit of saving for retirement, for example. Generally, your elective deferrals to traditional pre-tax retirement plans, they are not included in box 1.
Like a traditional 401k.
Exactly, or a traditional 403b. These are pre-tax contributions. Let's say your salary is $70,000 gross, and you put $5,000 into your traditional 401k.
Right.
That $5,000 comes off the top before they calculate your federal income tax. So your box 1 wages might only show $65,000.
Oh, so I'm only taxed on the $65,000 for federal income tax purposes.
That's right. You just saved federal income tax on that $5,000 right now this year simply by contributing to your retirement. That's a direct, immediate tax saving reflected right there by its absence from box 1.
That is a fantastic aha moment. Your 401k contribution lowers your current taxable income. Love it. Okay, let's move down. Boxes 3 through 6. Social Security and Medicare. These are about future benefits, right?
Absolutely. These boxes are all about the FICA Tax's Federal Insurance Contributions Act, supports Social Security and Medicare.
So, box 3, Social Security wages.
Box 3 shows the wages subject to Social Security tax. Key thing here. There's an annual limit called the wage base. For 2025, it's $176,100.
Okay, a limit, meaning?
Meaning, once your earnings hit $176,100 in the year, you stop paying Social Security tax on any additional earnings for the rest of that year. And those earnings above the limit don't increase your future Social Security benefits calculation.
Got it. And box 4 is the tax withheld based on box 3 wages.
Exactly. Box 4 shows the employee's share of Social Security tax withheld, calculated on the box 3 amount up to that limit.
Okay, but Medicare is different. I remember you saying no limit there.
Correct. Very different. Box 5 is Medicare wages and tips. And the crucial difference, no limit. Every single dollar you earn is subject to Medicare tax.
No capital.
No cap. So box 5 often shows a higher number than box 3, especially for higher earners. And box 6 shows the employee's share of Medicare tax withheld on that full box 5 amount.
And isn't there an extra Medicare tax for some people?
Yes, there is. The additional Medicare tax. It's an extra 0.9% tax on wages that go over $200,000 in a calendar year.
0.9% extra.
Right. And this one's only on the employee. The employer doesn't pay a matching share of this additional tax. They just have to start withholding it once your pay crosses that $200,000 threshold for the year.
Okay, let's use that example from the source to make the SS Medicare difference clear. Someone earns $199,750 in 2025. What do boxes 3 and 5 look like?
Perfect example. So $199,750 total earnings. Box 3, Social Security wages, would show $176,100.
A limit.
The 2025 limit, because earnings above that aren't subject to Social Security tax. But Box 5, Medicare wages and tips, would show the full $199,750.
The whole amount, because no limit.
Exactly, because there's no limit on Medicare wages. That difference really highlights how the two parts of FICA work.
Crystal clear. Social Security capped, Medicare isn't. What about tips specifically? Do they get their own boxes?
They do, sort of. Box 7 is Social Security tips. This shows tips you reported to your employer, helps make sure your Social Security record is accurate for tip income.
Okay. And box 8, allocated tips. Sounds different.
It is different. Box 8, allocated tips, is usually only seen if you work at a large restaurant or bar. These are tips the employer assigns to you, maybe if reported tips seem low. Crucially, the amount in Box 8 is not included in Box 1, 3, 5, or 7.
So it's separate.
Totally separate. It's informational on the W-2, but you, the employee, generally have to report these allocated tips as income on your tax return yourself.
Huh, okay. Good to know. Moving along. Box 10, dependent care benefits. This sounds like a good one. Maybe another hidden tax saver.
It definitely can be. Box 10 reports benefits you got under a Dependent Care Assistance Program. Think flexible spending accounts, or FSAs, for daycare.
Right, paying for childcare pre-tax.
Exactly. It's a fantastic benefit. You use pre-tax dollars for eligible dependent care. That's direct tax savings. There's usually an exclusion limit, often $5,000 per household.
$5,000 tax-free.
Generally, yes. Box 10 shows the total benefit you received. If the amount is over that $5,000 limit, the excess amount is taxable, and that excess part gets added into boxes 1, 3, and 5. But up to the limit, tax-free benefit shown in Box 10.
Nice. Okay, Box 11, non-qualified plans. Sounds complex.
It is a bit more niche, yeah. Box 11 is mainly information for the Social Security Administration. It helps them figure out if any income reported elsewhere on the W-2 was actually earned in a prior year.
Why do they need to know that?
It affects things like the Social Security earnings test for people getting benefits while working, or calculating benefits correctly if income was deferred. It usually shows distributions from non-qualified deferred compensation plans or non-governmental 457B plans.
So less relevant day-to-day for most employees, more for SSA record keeping on complex pay structures.
Pretty much. And there are even complexities where if you get distributions and make deferrals in the same year, Box 11 might be blank and a different form is used entirely. So for most people, Box 11 might just be 0 or empty.
Okay, got it. Now, Box 12, the one with all the codes. This feels like where a lot of the specific benefits and potential tax savings really show up, right?
Absolutely. Box 12 is like the miscellaneous drawer, but full of really important details. It uses codes a letter, followed by a dollar amount, like D5000.00.
And there can be multiple codes.
Yep. On the official SSA Copy A, there's room for up to 4 codes. If an employer needs more than 4, they actually have to issue a second W-2 just for the extra Box 12 items.
Wow, a whole extra W-2 just for codes.
Can happen, though on your copy they might use a substitute form that can fit more than 4.
Okay, let's hit the highlights.
Yeah.
What are the codes that scream tax savings or important benefit?
Okay, the big ones for direct, current tax savings are the retirement plan deferral codes. Code D for 401k, Code E for 403b, Code F for SEP IRA, Code G for governmental 457b, and Code S for simple IRA.
These are the pre-tax ones.
Yes. These codes show your contributions to traditional pre-tax accounts. And remember what we said about Box 1. These amounts are generally not in Box 1. So seeing a code D, E, F, G, or S with a dollar amount is direct proof of income you deferred tax on this year.
That's powerful. Seeing it right there connects the dots. What else is big in box 12 for benefits?
Okay. Code T is adoption benefits. Shows the total employer help, even if it's up above the tax-free limit, which is $17,280 for 2025. Significant non-taxable help there.
Adoption benefits, got it.
Code W is Health Savings Account, HSA, contributions from your employer. This includes money you might have contributed through a cafeteria plan pre-tax. HSAs are amazing tax-deductible going in, tax-free growth, tax-free out for medical. Code W shows the employer is part of that triple tax benefit.
HSAs are definitely a hot topic. That triple benefit is hard to beat. What about the Roth side of retirement? Different codes.
Different codes, different tax treatment. Code EBA for Roth 401k, code BB for Roth 403b, and code EE for governmental Roth 457b. These show your after-tax Roth contribution.
After tax. So these amounts are included in box 1.
Correct. You pay tax on them now. The saving comes later, tax-free growth, tax-free qualified withdrawals in retirement. It's a different flavor of tax saving, focused on the future.
Pay tax now or pay tax later. Got it.
And there's one that just tells you how much your health insurance is worth, even though it's not taxed.
Yes. That's code DD, Cost of Employer-Sponsored Health Coverage. It's purely informational. The amount shown is not taxable income to you.
But it's good to know. Shows the real value of your benefits package.
Exactly. People often underestimate the value of their health plan because it doesn't show up in their paycheck amount. Code DD gives you that number, often thousands of dollars your employer is paying tax-free on your behalf.
That's a really important piece of your total compensation puzzle. Okay, what about small businesses? Any specific health code for them?
Yes, code FF. This is for a QSEH Ag Qualified Small Employer Health Reimbursement Arrangement.
QSEHRA. Got it. It shows the total benefit amount you are entitled to receive for the year under the plan, up to the limits. $6,350 self, $12,800 family for 2025. Not necessarily what you actually got reimbursed, but the max potential tax-free help available to you from your small employer for health costs.
Entitled amount, not actual reimbursement. Key difference. And one more, code 2.
Code 2 is for certain Medicaid waiver payments that are excluded from gross income under a specific IRS notice. If you receive these, Code 2 shows the amount that isn't taxed, directly lowering your taxable income.
Okay. Lots of other codes, too, for things like uncollected tip taxes, stock options. But those seem like the most common ones impacting the bottom line or showing major benefits.
Agreed. Those are the heavy hitters for most people.
Right, box 12 done. Let's look at box 13, the check boxes. Seems simple, just checks and boxes, but they carry weight, right? Especially for retirement stuff.
Huge weight, deceptively simple look. First checkbox. Statutory employee. Not super common. Applies to certain workers, like some drivers or insurance agents who might seem like independent contractors but are treated as employees for FICA taxes, Social Security, Medicare, but not federal income tax withholding.
So, kind of a hybrid status, mostly an employer classification thing.
Mostly, yeah. Explains why their W-2 might look different. Second checkbox. Retirement plan. This one. Everyone should look at this.
Why is retirement plan so critical?
Because if that box is checked, it means you were considered an active participant in an employer's retirement plan during the year. And that status active participant can severely limit or even eliminate your ability to deduct traditional IRA contributions on your personal tax return.
Ah, so it directly impacts your personal IRA strategy.
Directly. Depending on your income level, if that box is checked, your IRA deduction might be smaller or gone completely. For pensions, defined benefit plans, you're active if you're just eligible. For 401k, defined contribution, you're active if any money yours employer's forfeitures went into your account. It's a major tax planning point tied to that little check mark.
Wow. Okay, that's a critical connection. Third checkbox is usually third-party sick pay, less common for most.
Right. Usually relates to disability payments made by an insurance company, not directly by the employer. Less common on a standard W-2.
Okay, so the big one in box 13 is retirement plan. Got it. Now, box 14, other information, seems like a free-for-all box.
Kind of is. Box 14 is optional for employers. They can put pretty much anything else they want to communicate to you here.
Like what sort of things?
You might see union dues withheld, uniform costs, maybe state disability insurance taxes withheld in some states, a minister's housing allowance, sometimes certain other retirement contributions. It varies wildly. Always worth a glance just to see if there's anything relevant.
A catch-all. Okay. And finally, boxes 15 through 20, state and local taxes. Pretty straightforward.
Yeah, they should be straightforward. They show your employer's state ID number, the amount of wages subject to state income tax, box 16, state income tax withheld, box 17, and then similar info for local taxes in boxes 18, 19, and 20 if applicable. You just need these numbers directly for filing your state and local returns.
Perfect. Okay, we've dissected the W-2 itself. Now let's touch on some of those special reporting scenarios you mentioned earlier. Things where the rules get a bit specific, often involving benefits or unusual situations.
Right. These really show the tax code's nuances playing out on the form, like adoption benefits. We saw code T in box 12. Remember, the qualified amounts paid by the employer are not in box 1, so no federal income tax.
Right, tax-free for income tax.
But they are subject to Social Security and Medicare, so those amounts are included in boxes 3 and 5. And the total benefit, even above the limit, shows up under code T. A great tax-favored benefit structure.
Good structure indeed. How about Archer MSAs and HSAs again? Employer contributions.
Employer contributions, including your own, if made via a cafeteria plan, are generally not subject to federal income tax or FICA taxes. So completely tax-free going in from the employer side. They get reported in Box 12, Code R for Archer, Code W for HSA.
And if I contribute directly, not through payroll.
Then those contributions would be part of your W-2 income initially, but you generally get to deduct them on your Form 1040 tax return, subject to limits. Still tax-advantaged, just handled differently. HSAs, especially, that triple tax advantage makes them worth looking into if you're eligible.
Definitely. Okay, a tougher one. Deceased employees' wages. How does that work if wages are paid out after someone passes away?
Yeah, it's complex. If wages owed are paid after death, but in the same calendar year the employee died, those payments are subject to Social Security and Medicare taxes.
Okay, FICA applies.
Right, so they get reported on the deceased employee's W-2, but only in boxes 3, 5, 4, and 6, the FICA wage and tax boxes. Crucially, these amounts are not put in box 1, the federal taxable wages box.
Why not box 1?
Because they aren't subject to federal income tax withholding for the deceased employee. The income tax liability generally passes to the estate or beneficiary who receives the money.
Ah. And what if the payment happens in the next year, after the year of death?
Completely different. Paid after the year of death. Not reported on a W-2 at all, and not subject to Social Security or Medicare taxes.
So no W-2, no FICA. How is it reported then?
In both cases, paid same year or later year, those post-death payments also need to be reported on a Form 1099 MISC issued to the estate or beneficiary showing the income under their name and tax ID.
Let's use Sam's example again. $10 here earned before death, $3K paid to estate in the same year. Walk us through his W-2 and the 1099.
Okay, Sam's 2025 W-2. Box 1, $10,000 pre-death wages, the $3,000 paid after death, not in Box 1.
Got it.
Boxes 3 and 5, FICA wages, would include that $3,000 plus the $10K, assuming it's under the SS limit. Boxes 4 and 6, FICA taxes, would show the SS and Medicare withheld on that $3,000.
Okay, FICA covered on the W-2.
Then, a separate Form 1099 MISC is issued to Sam's estate for $3,000 in Box 3, other income. That's how the estate beneficiary knows to report it for income tax. If that $3K was paid in 2026 instead, no W-2 reporting for it, no FICA, only the 1099 MISC to the estate.
Makes sense. It ensures FICA credit if paid promptly, and income tax liability follows the money. Okay, educational assistance. Tax benefit here.
Big potential benefit. Up to $5,250 per year of employer-provided educational assistance can be tax-free, excluded from your wages.
$5,000 free for school. Nice.
Yeah, but the key is it has to be under a qualified Section 127 plan. If it qualifies, that $5,250 is not in Box 1, direct reduction in taxable income. Great perk.
And fringe benefits generally, like that company car.
Rule is, any taxable fringe benefit gets included in Box 1 wages, and if applicable, Boxes 3 and 5 FICA wages. The personal use value of the car is the prime example. It's income, plain and simple.
Medicaid waiver payments. Code 2 again.
Right. Under IRS Notice 2014-7, certain payments for home community care are excluded from gross income for federal tax. Code 2 in Box 12 flags this excluded amount. Directly lowers your taxable income.
What about moving expenses? Mostly gone, except for military.
Exactly. For armed forces members, if the employer pays a mover directly or provides the move in kind, it's not on the W-2. If they reimburse the employee directly for qualified expenses, it's reported only in Box 12, Code P. Non-qualified moving expenses, though, those are taxable wages in Boxes 1, 3, and 5.
Okay. Non-qualified deferred compensation, NQDC, Section 409A. Sounds scary bottom line for us.
NQDC is basically income promised now but paid later without the usual 401k protections. Section 409A has strict rules. If the plan follows the rules, reporting might be minimal on your current W-2, maybe Code Y in Box 12 for deferrals, maybe not. But if the plan fails, Section 409A rules, big uh-oh, The improperly deferred income becomes taxable immediately. It goes into Box 1 and gets flagged with code Z in Box 12. And worst part, you, the employee, get hit with an additional 20% tax plus interest penalties on that amount.
Ouch. So compliance by the employer is critical for the employee's tax health.
Absolutely critical.
Let's talk SEP and simple IRAs. How do contributions affect the W-2?
For traditional SEP or simple IRA salary reductions, they are not subject to federal income tax withholding, so not in Box 1, direct tax deferral.
Like a 401k.
Exactly. But they are subject to Social Security and Medicare taxes, so they are included in Boxes 3 and 5. The amount is also shown in Box 12 with code D, SEP, or S, simple.
But what if it's a Roth SEP or simple?
Ah, the Roth twist. If you designate Roth treatment, those contributions are subject to federal income tax withholding, so they are included in Box 1 and 3 and 5. They still get reported in Box 12, but with code F, Roth's S, or still S, Roth simple, the code doesn't change, but the tax treatment does. It flips the tax benefit from now to later.
Important distinction. And virtual currency, if paid as wages.
Taxable, full stop. The fair market value when paid is income. Subject to federal income tax withholding, Social Security, Medicare, must be reported on the W-2, included in Boxes 1, 3, and 5. IRS treats it like property paid as wages.
Got it. Crypto is property, value is wages. And lastly, that QSEHRA again. Code FF.
Right, qualified small employer HRA. Remember, code FF shows the total permitted benefit you're entitled to, $6,350, $12,800 family for 2025, not what you actually got reimbursed.
Potential, not actual.
Right. Now, complexity. If you didn't have health insurance, minimum essential coverage, MEC for part of the year, any QSEHRA reimbursements for that uninsured period, those become taxable, reported in Box 1 only, not 3 or 5. Same if the plan reimburses for things like over-the-counter drugs without prescription, those might be taxable in Boxes 1, 3, and 5. But Code FF still shows the total entitlement can get tricky, but potentially very valuable tax-free reimbursement.
Lots of nuances there. Okay, we've covered a ton. What about when things go wrong? Corrections. Forms W-2C and W-3C. We know they exist, but what are common screw-ups employers should avoid?
Knowing the common errors helps everyone. Big ones. Don't print copy A from the web for filing. SSA needs the official red ink ones or e-file. Getting employee name SSN wrong, huge issue, causes mismatches. Reporting SS tax withheld, Box 4, when SS wages, Box 37, are zero illogical. Reporting Medicare wages, Box 5, less than SS wages plus SS tips, Box 3 plus 7, impossible. Medicare base is always ESS base. Exceeding the SS wage base limit, $176,100 for 2025, in Box 3. These are red flags for IRSSA.
And penalties if they mess up or don't file. You said they increased.
They did. For returns due after Disregarding Hinter 2025, failure to file correct forms on time, generally $340 per form penalty, maxes out at over $4 million a year for big companies, $1.3 million for small businesses. Mistakes add up fast.
$340 per W-2. Ouch. Can they argue it like a reasonable cause?
Sure.
Yes, penalties can be waived for reasonable cause. Means something beyond their control happened, they acted responsibly, etc. Not easy to get, but possible for genuine issues.
But what if it's deliberate, like they just ignore the rules?
Then it's intentional disregard. Penalties jump sky high, at least $680 per form, and no maximum limit. Could be financially devastating. And if it's actual fraud, filing a fake W-2, civil damages, $5,000 plus PEG, possible criminal charges. Serious business.
Whoa. Accuracy is definitely paramount. How do they actually make corrections? Say just fixing a name SSN.
For just name SSN, they fill out specific boxes on the W-2C, D through I, but leave the money boxes blank. Just correcting the ID info.
What if the whole EIN or tax year was wrong in the original? That sounds messy.
It is messy. Requires 2 sets of W-2C, W-3C. First set zeroes out the incorrect filing. Second set reports the correct EIN year with the correct money amounts. It's a pain. Underscores why getting it right first time is key.
Definitely. What about just a wrong address for the employee? Do they need to file a W-2 with the SSA for that?
Nope. Good news there. If only the address is wrong, no W-2C needs to go to the SSA. Employers should just get a corrected copy to you. They can issue a new W-2 marked reissued statement, or send a W-2C with just the address corrected, or even just resend the original in an envelope with the right address. SSA doesn't care about the address, just that you get the form.
That's much simpler. Now, a key point for listeners. What if you have to repay wages from a prior year? You already paid tax on it.
Super important point. If you repay wages you got in a prior year, those wages remain taxable to you for that prior year. Your old W-2 for that year doesn't get changed for Box 1 wages or Box 2. Fed tax withheld.
So I still owe the tax for that past year. Can I get that income tax back somehow?
Generally, no, you can't directly recover the federal income tax withheld. However, if the repayment amount is more than $3,000,
Okay, 3 grand or more.
you might get a deduction or a credit for the repayment amount on your tax return for the year you make the repayment. Doesn't change the past, but helps offset tax in the current year.
So some relief possible if it's a large repayment. Is there any tax I can get back from the prior year?
Yes, one specific thing. The additional Medicare tax. If that 0.9% extra tax was withheld on the wages you repaid, you can file an amended return, Form 1040X, for that prior year to get just the additional Medicare tax portion back.
Okay. Specific but actionable. Good to know. IRS Pub 525 has more on repayments, right?
Yep, publication 525 on irs.gov is the place for details on that.
Excellent. Okay, wrapping up. Reconciliation mostly for employers, but why is it important? And where can people find more help?
Reconciliation is huge for employers. They have to make sure the totals on all their W-2s and the W-3 match what they reported on their quarterly payroll tax returns, like Form 941.
Why?
Discrepancies are a huge red flag. If the W-2, W-3 totals sent to SSA don't match the 941 totals sent to IRS, expect letters and questions from the government. It means something's wrong somewhere.
And tips for them to avoid that headache.
Be consistent. Report SS and Medicare wage taxes separately and correctly across all forms. Don't transpose boxes. Stay under the SS wage limit. Make sure the EIN is the same everywhere, or properly note if a different one was used on quarterly forms. Meticulous record keeping is the name of the game.
Makes sense. And for listeners with questions about their own W-2, where should they turn?
Best starting points, irs.gov and ssa.gov. Tons of info, forms, pubs, key IRS publications, Pub 15 Circular E Employer's Tax Guide, Pub 15A Supplemental Guide, Pub 15B Fringe Benefits, also Pub 969 for HSAs, Pub 97 for education benefits, all free online.
And if you need to talk to someone.
SSA has numbers for employer reporting help, 800-772-6270, and BSO tech support, 888-772-2970. IRS has a technical services line for info return questions, 866-455-7438, toll-free, or a non-toll-free number, 304-263-8700. Help is available.
Fantastic. So there we have it, that seemingly simple W-2. It's actually this incredibly detailed snapshot of your financial year.
It really is. Tied to employer compliance, yes, but directly hitting your taxes, your benefits, your future Social Security.
Understanding, it isn't just about avoiding trouble. It's about seeing the real value of your compensation, finding those hidden savings, and just navigating your finances with more confidence.
And it shows how things keep changing, right? Like adding rules for virtual currency. The details matter, box by box, code by code. It all tells your story.
So the final thought to leave you with.
Yeah.
What other financial documents in your life, things you might glance at and file away, hold hidden details or benefits, just waiting for their own deep dive? Something to think about until next time.